The stock market is buzzing with excitement, and for good reason. The Nifty 50 index has kicked off the week with a remarkable surge, gaining 1% after a robust gap-up opening on August the 18th. This positive momentum can be attributed to several factors, including the anticipated rationalization of the Goods and Services Tax, GST, a favorable geopolitical environment, and SP's long-awaited upgrade of India's sovereign credit rating to BBB after an 18-year hiatus. However, as is often the case in trading, some investors took the opportunity to book profits, resulting in a decline of 145 points from the previously breached 25,000 mark. For the Nifty to maintain its upward trajectory, it is crucial that it defends the bullish gap created on Monday, which ranges from 24,670 to 24,850. If this support holds, we could see the index making its way toward the 25,000 level, and potentially even reaching 25,250. A significant barrier that could help break the pattern of lower highs and lower lows that has been observed since July. The fact that the index managed to rise above both the 20-day and 50-day exponential moving averages, EMAs, in a single trading session further bolsters this optimistic outlook. However, should the index fall and remain below 24,850, we might witness increased selling pressure, with the next support level identified at 24,700, as per expert analysis. On August 18th, the Nifty 50 opened impressively, starting 300 points higher at 24,938 and peaking at 25,022. Yet it faced some profit-taking early in the session, dipping to a low of 24,853. Despite this, the index managed to stay within a range, ultimately closing at 24,877, up 246 points for the day. The formation of a bearish candle with a long upper shadow on the daily charts suggests a potential reversal in the current downtrend. Nagarash Shetty, a senior technical research analyst at HDFC Securities, noted that if the bullish gap from Monday remains intact in the coming sessions, it could signify a bullish breakaway gap, typically seen at significant bottom reversals. Shetty also pointed out that the recent swing low of 24,337 recorded on August 8 is likely to serve as the near-term bottom for the Nifty. He indicated that the next target to keep an eye on is 25,250, with immediate support at 24,700. Looking at the weekly options data, it appears that the Nifty 50 is poised to aim for the 25,000 to 25,200 range in the short term, with support levels at 24,800 and then 24,500. In terms of open interest, the maximum call open interest is concentrated at the 25,000 strike, followed by the 25,500 and 25,200 strikes. Notably, the most significant writing activity is also at the 25,000 strike, followed by 25,200 and 25,100. On the downside, the 24,800 strike has the highest put open interest, followed by 24,900 and 24,500, with the most substantial put writing occurring at the 24,800 strike, then at 24,900 and 25,000. Turning our attention to the Bank Nifty, it too experienced a gap-up opening after nearly 2 weeks of consolidation. However, it struggled to maintain its gains due to selling pressure at higher levels. The index was unable to hold above the 20-day and 50-day EMAs, closing the session at 55,735, which is an increase of 393 points, 0.71%, but still lagging behind the benchmark Nifty 50. Similar to the Nifty, it formed a bearish candle with a long upper shadow on the daily time frame, indicating a potential trend reversal, but also highlighting the pressure at elevated levels. Sadiq Shah, head of technical and derivatives research at SBI Securities, mentioned that the 56,000 to 56,100 range will serve as a critical resistance zone. He stated, A sustained move above 56,100 could trigger a sharp rally, pushing the index towards 56,500 and then 56,900 in the short term. Conversely, the 55,500 to 55,400 range is expected to act as essential support for the index. Meanwhile, the India VIX experienced a notable range of 11.75 to 13.47 throughout the day, ultimately closing at 12.34, which is a slight decrease of 0.12%. This could indicate a less volatile environment for the market moving forward. As a final note, it's important to remember that the insights and investment strategies shared by experts on platforms like moneycontrol.com reflect their personal views and not those of the website or its management. Therefore, it's always wise to consult with certified professionals before making any investment decisions.